Welcome, curious minds. Today, we're diving into something tangible, something that, well, gleams with history and often quite a bit of value: silver.
Right.
But here's where it gets really interesting for your portfolio: the tax implications. It's not always as straightforward as, say, buying and selling stock.
No, not at all. And understanding those nuances, it can make a really significant difference to your actual returns.
That's what I hear.
Indeed. Many people see precious metals like silver as, a secure asset, a store of value, which it can be.
Sure.
However, truly maximizing that investment, that really requires a clear grasp of the tax landscape. So this deep dive we want to do is sort of pull back the curtain on the tax rules around silver.
Okay.
We're drawing insights from our source material to hopefully arm you with some practical knowledge.
Right. So our mission today is basically to give you a clear, concise understanding of what you need to know, navigating the tax side of silver investing, from capital gains to maybe some clever strategies without getting bogged down in all the dense jargon.
Exactly, like a shortcut.
Yeah, think of it as your shortcut to being well-informed, feeling confident about your silver holdings.
We'll try to explore everything from the real basics, like how profits are taxed, all the way to more strategic ways you might minimize your liabilities.
Good.
Just making sure you have those essential nuggets of knowledge, really, to consider if silver is part of your portfolio.
Okay, let's unpack this then. Starting with, I guess, the big one for most people: capital gains tax.
Right.
That's when you sell silver for more than you paid. Now, for folks familiar with investment taxes, the key thing with silver seems to be how long you've actually held it.
Yes, that holding period is absolutely critical. It's the main distinction.
Okay, so what's the starkest difference someone might see on their tax bill just based on that 1 year mark?
Well, it's significant. If you've held your silver for under a year, that profit counts as a short-term capital gain.
Right.
And that means it's taxed at your ordinary income rate, which, in the U.S. can be as high as 37%.
Oof.
Yeah. But if you hold it for 1 year plus a day, basically.
That's over the year.
Exactly. It shifts into the long-term capital gains category. And here's the real key insight. The maximum tax rate for that is capped at 28%.
28%. Okay, even if your normal income tax rate is higher.
Even if your marginal rate is 37%. So that's potentially a 9 percentage point swing.
Wow.
You could keep nearly 10% more of your profit just by, waiting potentially an extra day or two.
So it's not just buy low, sell high. You need a good calendar, too.
You really do. No selling on day 364.
Huh. Okay, so beyond capital gains, what about sales tax? Is that something that varies so much that crossing state lines could actually matter?
It absolutely can. Sales tax on silver purchases isn't universal at all. It varies sometimes dramatically by location.
Really?
Yeah, some states in the U.S. actually exempt silver, certain types anyway, from sales tax entirely. Others don't.
Huh.
So the key insight there, especially for larger silver purchases, is that understanding this variation means you might look beyond just convenience.
You mean like physically going somewhere else?
Well, maybe traveling to an adjacent state with an exemption, or perhaps more practically buying from an online dealer based in a tax-free state.
Right, online.
It could be a tangible tax-saving strategy. It might outweigh minor logistical costs. You're turning a potential hidden fee into a smart saving.
That's actually a really clever way to think about it. Okay, so for all these transactions, buying, selling, how do you keep track of everything for the IRS? What are the maybe common mistakes investors make with records?
That's where the reporting requirements come in, and they are paramount. The IRS needs accurate, detailed records of all your silver transactions.
Well, all of them.
Yes. You have to report gains or losses from silver sales, just like other investments. It typically goes on Form 1099-B for the year you sell.
Okay.
And the most common pitfall, honestly, it's underestimating the level of detail needed. You must track purchase dates, sale dates, purchase prices, sale prices for every single piece or lot.
Wow, okay. That sounds like a lot.
It can be. And not having those records makes calculating gains tough, obviously. But it can also lead to significant penalties if you get audited.
Right. Avoid the audit headache.
Definitely. Our sources really stress safely storing receipts, transaction documents, maybe using robust digital spreadsheets or financial software to keep everything meticulously organized.
Makes perfect sense. Okay, let's shift gears a bit, moving on to something maybe a little more advanced but sounds powerful: using silver for retirement planning, specifically through a self-directed IRA. What makes a self-directed IRA so, well, unique for silver investors?
The real power of a self-directed IRA, it's the control it gives you. unlike traditional IRAs, which usually limit you to, mutual funds, bonds, stocks.
The usual suspects.
Exactly. A self-directed IRA lets you invest in alternative assets, and that includes physical precious metals like
Mm.
silver.
Ah, okay. So it opens up the options significantly.
It really does. It allows for diversification and strategies that you just can't do in standard retirement accounts.
So when we talk about actually putting silver into one of these accounts, what are the specific tax benefits? Especially maybe contracting a traditional self-directed IRA with the Roth version.
Good question. If you hold silver within a traditional self-directed IRA, the investments grow tax-deferred,
Tax deferred, meaning.
meaning you don't pay taxes on any gains year after year. You only pay taxes when you withdraw the funds in retirement. It lets the investment compound without that annual tax drag.
Gotcha. Okay. And the Roth.
Now, if you opt for a Roth self-directed IRA, assuming you follow all the rules about contributions and withdrawals,
Right, the fine print.
your silver investments can grow entirely tax-free.
Tax-free, completely
Completely
right.
tax-free gains, even when you withdraw them in retirement. That's a really significant benefit for long-term growth. No taxes owed on the appreciation.
Wow, okay. That is a huge potential benefit, especially for maximizing that retirement nest egg. So, beyond the IRA structure itself, are there other effective strategies people can use to minimize tax liabilities with silver?
Well, one of the most straightforward but impactful strategies, like we touched on earlier, is simply timing your sales carefully.
Right, back to the calendar.
Exactly. Knowing that 1 year holding period is the threshold for that lower long-term capital gains rate.
Yeah.
Proactive planning is just key. If you think you might need cash, try to plan ahead to sell after that 1 year mark.
So you almost need to set that calendar alert for day 366 the moment you buy it.
That's honestly not a bad mindset to have.
Okay. Are there any maybe common deductions or credits that silver investors might overlook? Things they could leverage?
Well, direct deductions specifically for silver investments themselves are pretty limited.
Okay.
However, you can often benefit from more general investment-related deductions. For instance, costs for investment advice or financial management service fees related to your whole portfolio, which includes the silver.
Ah,
Those might be deductible depending on your situation. The practical tip is just meticulously track all investment-related expenses. Think about safe deposit box fees if you're storing physical silver,
oh, good point.
or maybe fees tied to setting up or maintaining that self-directed IRA. Definitely talk to a tax pro to see what you're eligible for and keep those records solid.
Good advice. What about exemptions? Are there any specific exemptions related to silver itself or how it's handled that could cut down the tax burden?
Yes, there are certain exemptions that can potentially help. For example, gifting silver.
Gifting it.
Yeah, say to a family member. Depending on the value and the current tax laws around annual gift tax exclusions, you might be able to transfer that silver without triggering capital gains tax for yourself.
Interesting. Like passing on wealth.
Exactly. It
Yeah.
can be a smart way to do that.
Hmm.
Also, some places, some jurisdictions might offer specific exemptions for certain types of silver, maybe particular collectible coins or bullion of a certain purity.
Mm.
But it's always worth looking into those local or specific nuances. Sometimes you find unexpected tax relief there.
This all definitely sounds like, well, a lot to keep track of. How critical is it for investors to actively monitor changes in tax law? It sounds pretty complex and like it changes often.
It is, and it's absolutely critical to stay informed. Tax codes are definitely not static. They change, sometimes frequently.
Right.
And those changes can directly impact how your investments are taxed, which strategies work best. If you're not staying informed, you can miss out on new benefits, or worse, maybe fall out of compliance without realizing it.
Yeah, wouldn't want that.
No. And beyond just law changes, it comes back to accurate reporting of all your transactions, understanding your sales tax duties, your capital gains obligations. It's all part of being a responsible investor. Think of it as an ongoing dialogue with your own financial health.
An ongoing dialogue. I like that. Given that ongoing need and all the layers of complexity we've just talked about, it really sounds like getting professional guidance isn't just like a nice to have, but maybe almost a necessity for really optimizing.
I would lean that way, yes.
Yeah.
Especially if your situation is complex or you have significant holdings.
What specific value does a tax professional, maybe one specializing in investments, bring here?
Well, they provide invaluable guidance, really, helping you navigate these complex laws, identifying deductions or credits you might easily miss on your own, and crucially, ensuring you stay compliant with all the reporting rules. Their real specific value, though, it's offering tailored advice based on your unique financial situation, your investment goals.
Right, personalized.
Exactly.
Mhm.
They don't just fill out forms. They can help strategically optimize your approach to silver, minimize those tax liabilities, and ultimately help maximize your net returns. It's really a proactive investment in your own financial success.
Okay. So we've really unpacked quite a bit here. The crucial tax considerations for silver investors, understanding those big differences in capital gains based on how long you hold it,
Right.
leveraging things like self-directed IRAs, smart timing strategies. It seems really clear that a bit of planning and awareness can go a very, very long way in this space.
Indeed, it can. This whole deep dive, I think, shows that silver isn't just a tangible asset you hold on to. It's an investment that truly demands careful thought about its tax implications. And knowing these details, understanding them, can fundamentally make a difference to your overall financial success.
Yeah.
How much of your gains you actually get to keep in your pocket.
It's fascinating, isn't it? How seemingly small detail, like you said, holding an asset for 364 days versus 366 days
Just 2 days.
can have such a profound, tangible financial impact on your bottom line. It's kind of amazing.
It really is. And, this raises an interesting question, I think, for people to consider.
Okay.
Given that these tax implications can so significantly alter the outcome of an investment, how might a deeper understanding of the tax codes influence your initial investment choices? Not just, your exit strategy when you sell, but what you choose to buy in the first place.
That's a really interesting point, thinking about tax right from the very beginning. Something to definitely mull over as you think about your next investment move. Well, thank you for joining us on this deep dive.
My pleasure.
We really hope you feel a little more well-informed and empowered in your own financial journey.